All right, let's do our next part of the chapter 5 video. All right, so the next thing I want to talk about a little bit, we just covered break-even point and we used the break-even formula. So I want to go back to this data right here and I want to calculate our break-even point, and then I want to talk to you guys about these percentages because we haven't really talked about these percentages yet, but you've probably been wondering about them because they're always off to the side. So to calculate our break-even point, we would do 80,000 divided by 200 each. So we would get 400 bikes. So for every bike we sell, we make 200 each. So we need to sell enough bikes to be able to break even. But I have these other numbers here off to the side. And I want to be able to write something over here, but I don't think I can. So I'm going to insert a column off to the side. Insert column to the right. And then make it bigger. Okay. So to get that number, to get that 100%, what you do is you take 500 divided by 500. And so basically it's the selling price divided by the selling price, and everything is going to be divided by the selling price. So on this one, it would be 300 over 500. And then this one is 200. Oops. 200 over 500. So I want you to see that if you, in your calculator, take 200 divided by 500, you get 0.4 or 40%. And what we're saying here, what that means is we make 40 cents on the dollar. So every time we have a dollar of sales, we get to keep 40% of it to cover the fixed costs. And then once we cover the fixed costs, we'll contribute to our profit. So this CMR is what this is called. This is called a contribution margin ratio. You don't have to use the per units to get this though. You can actually use the totals instead. And so I'm going to have to make these significantly smaller to be able to. So let me take these. I'm going to change the font to be super little so that I can write more over there. Okay. So instead of 500 over 500, you can also use the totals. So you can do 250,000 divided by 250,000. And you can do 150,000 over 250,000. Again, always putting sales downstairs because we're looking at how much money do you make on sales. And then 100,000 divided by 250,000. So if you take 150,000 and divide by 250,000, you get 0.6 or 60% or 60 cents on the dollar. So for every dollar of sales, 60 cents goes to cover our variable costs, and the other 40% we get to keep, and we use it to cover our fixed costs. And once we cover our fixed costs, it contributes toward profit. So it's called CMR. And the way that that works, let's go back to where I was in the notes. So the 500, the 300, and the 200, and I've kind of explained how to get those. And so the CMPU and the CMR are very similar because the CMPU is per unit because of the U, and the CMR is based on dollars. So my break even in units, let's do the units one first. My break even in units, which we already did, was fixed cost divided by CMPU. Okay. But my break even in dollars is fixed cost divided by CMR. So if I want an answer in dollars, then I can divide by R. And if I want an answer in units, I can divide by the PU. But like this is the answer in units, and this is the answer in dollars. And so so in general, I don't compute the CMR unless I need it for a problem. You have to use a CMR when you have multiple products because you have several different PUs. So like you make a certain amount on, different product lines. So you have to use the CMR when you have multiple product lines. But if I'm only selling one product line, I just use the units and then I just convert it to dollars. So in my example, I'm selling bikes for 500 and they cost me 300. So every time it's $200 a bike. So I would find my answer in bikes and then I would just convert it to dollars and I would never even find the CMR. But you can also just, instead of taking the units and then converting it to dollars, you can take fixed cost divided by CMR. And so the fixed costs in our problem were 80,000 and the CMR was 0.4. Our CMR is 40% or 0.4. So if you take 80,000 divided by 0.4, you get 200,000 of revenue. So you don't have to do it in units and then convert it to dollars. So, and the main benefit to this is, and it's in most businesses, you have to use the CMR. So you have it when you have multiple products. So when you have multiple products, you don't have a choice. You have to use the CMR instead of the CMPU. So the two different ways you compute the CMR is one, just using the units and doing 200 over 500, but you can also do it as 100 over 250. So very rarely do you just want to break even. You're not trying to just break even in your business. You want to have profits. And so profit is an important part to figuring these things out. And so the formula to break even, is fixed costs over CMPU, 80,000 over $200 a bike. And so if you want profit, you just add it to the top part. So instead of just covering fixed costs, you're also trying to cover some profit. So seldomly do you just push to earn a break even, you want profit. And so let's go ahead and assume that Nord or exercise bikes, they want profit of 100,000. So if they want 100,000 of profit, they're going to add the 100,000 to the 80,000 of fixed costs, and they're trying to make 180,000 over $200 per bike. So what I would do is I would take 100,000 plus 80,000. And I would divide by every bike I sell, it's 500 minus 300. I make $200 a bike. So then I would say that equals, and I think 180,000 over 200 is 900. Yep. So I need to sell 900 bikes to be able to have profits of 100,000. So to show my work on it, I've just built an income statement. And if I sold 900 bikes at 500 each, it would bring in revenue of 450. If I sold 900 bikes at a cost of 300 each, that gives me 270. 450 minus 270 is 180. My fixed costs are 80,000. So I have 100,000 of profit. But once you have profit, you got to pay taxes. And so this is the only part where I talk about taxes. And I don't think any of your homework is going to have you do anything with taxes. But basically what happens is if you're going to have profits, then you've got to give some money to the government. So what you have to do is you have to gross up your number. So what you do is you divide by 1 minus the tax rate. So if you want take home of 100,000, and you can do this on your own paychecks. So if you want take home of $3,000 a month and you give 30% of your money to the government between self-employment and federal income taxes and stuff like that. If you want take home of 3,000 a month, but you know that you give 30% of your money to the government, then you can divide by 0.7 and you actually have to make $42.85 a month or annually $51,429 to be able to take home 3. So to figure out the amount of money that you pay in taxes, everybody pays 0.0765 for FICA. And then it depends on what tax bracket you're in. So if you're in the 12% for federal and probably 6% is Kansas, it's between 3 and 6. It just depends. So maybe this is your percentage that you pay in taxes. And so, yeah, so you can back into numbers by dividing by 1 minus the tax rate, and it grosses up the number. So if we want take home of 100, and I used a 20% tax rate, so I would get like a nice whole number, which that's not a thing, but that's okay. So what I would do is I would take 100,000 and I would divide by 1 minus 20%. So I would divide by 0.8. So which is 1 minus 0.2. Okay, I can show my work there, I guess. So 100,000 divided by 0.8 is 125,000. So what that means is you've got to actually sell, you have to have profits of 125 to be able to have take home of 100. And that makes sense. So because 125,000, if you have 125,000 and you give 0.2 to the government, you'll give 25,000 to the government and you get to keep 100. So what you do is you use this same profit formula, but we're going to put 125 instead of 100, knowing we're going to have to give some money to the government. So what we'll do is we'll take 125,000 plus 80,000. So this is target profit plus our fixed cost. And then we divide by our CMPU. Our CMPU was $200. And so if we do that, we would have 125,000 and 80,000 divided by 200, and we would need to sell 1,025 bikes. So again, when I do the formulas, students don't necessarily believe me. So I like to show the proof just so that you understand where it was coming from. So anytime I'm trying to really understand something, I just build a contribution margin income statement. And so if I sell 1,025 bikes at 500 each, my revenue is 512.5. If I sell 1,025 bikes at variable cost of 300 each, I get 307.5. 512.5 minus 307.5 is 205. And then I have to pay my fixed costs like rent and stuff. And that leaves me with 125. And then once I have the 125, I give 20% to the government. So this is what I pay in taxes. And then I get to keep 100. So that works. So the key here is just adding whatever you want to the top part. Whatever you want for profit, adding it to the top part of your break-even formula. Our break-even formula is fixed cost divided by CMPU. All right, so back down here. Last thing in this chapter is to go through and look at how changes in things affect our break-even point and profits and things like that. So there's no calculation to be done here. It's just saying, like, if costs go up, what happens to break even? And that's kind of how I word it, because like in general, if you just think about like the theory, it actually makes sense. And so if we change the fixed costs, it's going to change break even. So the first thing I would do probably is I would identify the formulas. And so remember that SPPU, I don't want to write it right there. I think I can write it up here somewhere. SPPU minus BCPU equals CMPU. And then the other thing I would point out is break even equals fixed cost divided by CMPU. So knowing these two formulas, these are two formulas that we need to know for sure. Okay, these are basically, other than the income statement, these are really the only two formulas I really need you to know. So if fixed costs change, that's not going to change CMPU, but it is going to change break even. Because if fixed costs change, then it'll be more or less units to break even, but fixed costs don't influence your CMPU. So break even will change, but CMPU will not. And then if we increase fixed costs, what happens to break even? And what I always say is, like, in general, like if you're trying to break even and a cost goes up, you're going to need to sell more to break even. So you don't even really need to look at the formula, but if you look at the formula, if this dollar amount goes up, then you're going to need to sell more to break even, because if that number gets bigger, then you'll need to sell more to break even. So here you would just put, it goes up. Okay. And then if we change the variable costs, then that will change the CMPU. And if the CMPU changes, then your break even will change. So then the question says, if we decrease variable costs, what happens to break even? And again, ignoring the formulas, if a cost goes down, then you won't need to sell as many to break even. So the answer is decrease. I don't know why there wasn't a place for you to write that, but the answer is decrease. But if you want to see it here, if this cost goes down, then this cost goes up. And if this cost goes up, then you're going to divide by a bigger number and it'll be less units to break even. But I can stop and just say, all right, if my cost goes up, I need more units to break even. And if my cost goes down, I won't have to sell as many to break even. So if we change the selling price, if SPPU changes, that's going to change your CMPU. So that will also change your break even. So if we increase the selling price, what happens to break even? And again, ignoring the formulas, if you increase your selling price, if you sell them for more, you're not going to need to sell as many to break even. So if you sell them for more, then you're not going to have to sell as many to be able to break even, because you're going to be bringing in more revenue. But if we look at the formula, if SPPU goes up, then CMPU goes up. And if CMPU goes up in the bottom part, then that will mean not as many to break even. So changes in tax rates will not influence any of this because at this point, you're not paying any taxes. Okay, so changes in tax rates only affect the like after profit tax goal situations. And so the rest of the notes are actually so page 7, 8, and 9 are just sample questions. 7, 8, and 9, and 10. Nope, this is 9. Okay, are just sample questions. When I used to teach this class at Cloud a long time ago, my book was really, really bad. And so I wrote all my own homework problems. And then I came to Friends and there was a decent book. And so I started using that book's homework problems. And then things have just kind of morphed into not using a book again. So what we've got here is a bunch of sample problems for you to practice with. And so I think that I'm going to jump forward in the notes and then I'll make a third video of me working through these sample questions and you can work through them and then check them if you want to. Okay. So let's go ahead and jump forward to the last page. And I wanted to show you guys this. This is a traditional income statement compared to a contribution margin income statement. So the traditional income statement versus the contribution margin income statement is basically taking your numbers and dividing them up as either variable or fixed. Because a contribution margin income statement is revenue minus variable cost is contribution margin minus fixed cost is net income. Whereas traditionally we do COGS and selling and admin to get to net income. So it's taking this 15,000 and it's saying of that 15,000, how much is variable versus fixed? So variable selling looks like 3 and fixed selling is 12 for a total of 15. Looking at admin, I have 6, which is 1 and 5. And then our COGS, in the problems that you're going to do for homework, your COGS will all be variable. But in general, COGS is actually going to include direct material, direct labor, and overhead. And some of your overhead is fixed. So this is more realistic. So the variable portion is 12 and your fixed portion is 22. But I want you to notice that your revenue stays the same. Your revenue is 60 and 60, and your net income is the same. 5 and 5. It's just, are you dividing up your cost as COGS versus selling admin or variable versus fixed? So this is the traditional income statement and this is the contribution margin one. And I have 2 homework tabs. The last 2 homework tabs are going to have you guys do that. So, all right, that's a good stopping place.